Hello everyone, welcome back to our channel and welcome back to this video. In this video, we wanted to share with you how OpenAI has closed Silicon Valley's largest private funding round. OpenAI has completed the largest private funding round in Silicon Valley history, raising $122 billion at an $852 billion valuation. The transaction positions the company for an anticipated public listing while securing the capital that is necessary to pursue its infrastructure-intensive AI development roadmap. The round reflects the continued institutional confidence in frontier AI development, despite the mounting competitive pressure and questions about sustainability of current spending levels. With this context, let's look at the capital structure and the investor composition. The round's anchor commitments come from three technology conglomerates with strategic interests in AI infrastructure. Amazon committed $50 billion, though $35 billion of that amount is contingent on OpenAI reaching either a public listing or achieving artificial general intelligence. Nvidia and SoftBank each invested $30 billion. The remaining capital came from venture and growth equity private firms including Andreessen Horowitz, Abu Dhabi's MGX, TE Chauvin, Just TPG, and more. A notable feature of this round is the diversification of the shareholder base beyond the institutional investors. OpenAI raised more than $3 billion from individual investors through bank-facilitated channels. The company also announced inclusion in several exchange-traded funds managed by ARK Invest, marking the first private company to be held in ARK's flagship innovation ETF. This pre-IPO retail exposure represents an unconventional approach to building public market familiarity ahead of the listing. Let's look at the strategic implications of this. The funding arrives as OpenAI undergoes a strategic pivot towards enterprise-focused productivity tools. The company has discontinued its Sora video generation product and is consolidating its offerings into an integrated desktop application combining chat, coding assistance, and the web browsing capabilities. Enterprise customers now account for almost 40% of their revenue, with management projecting that share to reach approximately 50% by the end of the year. Amazon's investment includes a cloud distribution agreement to host and distribute OpenAI models for enterprise customers, creating a revenue-sharing agreement that deepens the commercial relationship between the two companies. This partnership adds complexity to the competitive landscape given Amazon's existing investment in Anthropic. Next, let's look into the financial position and the monetization. OpenAI reports $2 billion in monthly revenue as of March 2026, reflecting continued growth in both consumer and enterprise adoption. The company has departed from its previous subscription-only model by introducing advertising in ChatGPT, a revenue stream that reached $100 million in annualized revenue within 6 weeks of the launch. Management has previously characterized advertising as a fallback option, suggesting evolving capital requirements may be accelerating monetization strategies. The company has signaled infrastructure spending commitments exceeding $1.4 trillion in the coming years, a figure that underscores the capital intensity of frontier AI development and explains the scale of the current funding round. Finally, let's look at the market context and the IPO outlook. The transaction occurs against a backdrop of geopolitical uncertainty that has dampened public market appetite for new issuances. OpenAI CFO characterized the round as providing flexibility to pursue the company's AI roadmap without immediate dependence on the public market conditions. Both OpenAI and its rival Anthropic are expected to pursue public listings within 2026, which will test investor appetite for high-growth but unprofitable AI businesses. The concentration of capital amongst a small number of AI developers, combined with overlapping investor bases and commercial relationships with cloud and chip suppliers, has drawn scrutiny regarding systematic risk should the AI technology development timelines or the commercial outcomes disappoint the current expectations. As we wrap up this video, let's leave you with the key figures with respect to the valuation, the total funding round, Nvidia commitment, SoftBank commitment, the individual investor capital, the monthly revenue, enterprise revenue share, and the ad revenue. That's all that we wanted to share with you in this video. Hope you found this video insightful. Stay tuned then for our next update.